Hi guys, in this chapter we will discuss both these strategies, that is long iron fly and short iron fly strategies, and see how it works. Now let's see what happens within few days. As we can see, it is going into a certain bend. We will wait until we are sure which strategy to follow. It continues to go straight, we will sit tight and it falls. Now we can initiate the trade right here. But I would suggest you not to initiate trades on the fall, because falls usually are sharp and the share price comes back really fast up. So we will wait. Price goes again straight. We will wait. We will wait. Right here it goes up. So we know that our long iron fly trade can be initiated right here. So we will trade our long iron fly trade right here. How do we trade? We trade right on the close. We trade or trade with strike prices of both the option, both contract right here. And it is our loss mark. It is at 15.98, so let's presume it's 16. And we will put a 50 cent or 40 cent difference right here as the price at which, if it goes up, we make money. If it goes down below this certain point, we get out good right here. Wait a minute please. 60. Okay, so these are two green lines. Now it's 1 day, 2 day, 3 day, 4 day, 5 day. Now right here, weekly, if you are trading a weekly contract, it might have expired here. Now again, 1, 2, 3, 4, 5. The next week contract would have given us enough money to get out and book the profit, because at this green line we are making the max profit. The profit won't increase if the price continues to go up. So we will book the profit. And I would suggest you, once the price goes up, you can book it. But as we have discussed in the time spread chapter, that in options contract, once it nears expiration date, you get to keep the money, or like all the money. Because if it is, let's presume $3 premium 1 month before expiry, then on expiry, on the date of expiry, it will be, let's say, 5 cents as premium. So you get to keep the remaining premium in your pocket. So this is how it works. But what I am trying to say is, once it goes up, you can book it at any day you like, is so that you don't face any difficulty. But as we discussed in earlier chapter, the real difficulty starts once this upper Bollinger Band starts to contract. So we can square it right here anytime we like. Let's presume we didn't square. You will sit through it. And right here, the Bollinger Band does contract. If you can see, this is the first day. So we can square it right here or right here. Now these are 2 days. Now this is a perfect time to initiate our short iron condor trade. And we would initiate it. That is, we will put it right here or here, 1650. And on the upper Bollinger Band, that is 1690, we would trade our upper trade. And same way, as we have initiated a 40 cent difference, so 1610 would have been our bottom trade. Now you might be thinking why we initiated the first, that is the true trade with the same strike price right here. Why not on the top or on the bottom? Now in a short iron condor trade, we are expecting the price to stay within a certain band. So we want the trade to be made near the 20-day moving average, this red line. Why? Because we believe this trend line will go straight from now onwards. and as it will go straight, we will make the most money. So we need these two contracts to be near this line. Now why not on the line? Because there is a huge gap in between, and we don't want the risk to be so much lower. So we are initiating it below the lines, like in between the line, so that we don't go far too away from the close price. We need to stay within that band. So now let's see how the trade goes. 1 day, 2 day, 3 day, 4 day, 5 day. We are currently in loss. 6 day, 7 day, 8 day. Now right here, as you can see right here, once the price went up above the Bollinger Band, this was a dangerous sign. And right here on this day, we could have squared it and got out. Now why would we square it right here? Because if it goes above the Bollinger Band, then as we discussed earlier, it's the best thing for long iron condor, not for short iron condor. And once we trade it right here on the short iron condor, it represented us that we need to be vigilant. Now this D represents dividend. So one golden rule is never to trade around result season. Why? Because this is what happens. If the result comes good, example right here, you can see 5-cent dividend on June 26, 2015. Payment date is, and X dividend is June 3rd. So it's not a good sign. And once this happens, if you have traded it, square it on that day, book profits. So we could have booked the trade right on the next day once it opened lower. Boom, we booked it and got out. Now let's see what happens next and trade another trade. Right here, we believe the Bollinger Band is contracting, right? So we will initiate our short iron condor trade right here. The two strike prices. The top one at 50-cent difference would have been 17.75 right here, and the bottom one 50-cent difference would have meant 16.75 right here. Okay, now let's see what happens next, and let's put in an icon so that we can remember where we traded right here. So it's 1 day, 2 day, 3 day, and again it has gone on the lower side. This is a problematic thing, and it's on the bottom this line, so we would be initiating a max loss trade, but we would be squaring it on the next day open, because we cannot square it, we need the candle to close. So right here on this day we would be squaring it. It's 4 days and we would be somewhat in loss or break even. So we would have finished the trade right here. The price goes down, then comes back up, and right here it is near our Bollinger Band up, but on this day it is perfectly up. So this is a good time to initiate our long iron fly trade. This is 1810. So 1850 is our next mark, and 1760 is our next mark. Now let's see what happens next. 1 day, 2 day, 3 day, 4 day, 5 day, 6, 7, 8, 9, 10, 11. Now as you can see, the Bollinger Band keeps on moving up, so we will stick to our trade. I would suggest you to trade on weekly or on 15 days period. You can even extend it to make far more profit, but this is another sign. Now, as we discussed, we need the price to close beyond this green line or to close beyond this green line. Now, as you can see, the Bollinger Band starts to contract and we are stuck in our trade, right? So what do we do? But if you remember, we discussed if there is a difference between the green line and this Bollinger Band, then we believe the price can come lower, and on that day we will square. So as we are stuck, we trade it right here on this day. Let's move it. Wait a minute, please. Let's move it here. So we are stuck. And 1 day, 2 day, and now we have nothing to be done because Bollinger Band has contracted again. So we will be booking losses right here. The point of view is to understand how the trade goes. If we are trading long iron fly trades, then this green line is your profit line. So as and when it touches, if it touches the point, we square it on that day. This is a learning phase. You are profitable on the green lines. So if it Bollinger Band contracts and it touches our green line, that on that day we square it, we book profits, we get out. This is the learning phase. Otherwise, according to our plan, we will book profit right here. See? Now let's see what happens next. It goes straight, and goes on the bottom. Goes bottom, then again comes back up. Goes straight. And it continues to go straight. Right here it goes up, so we can initiate the long iron fly trade. Right here, on the close, we are initiating our 2 trades, and it will be, if you put a 40-cent difference, it will be 15.90, and if you put a 40-cent difference, it would be 16.60. Now you can see 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day. We are in profit. Now we will stick to our profit and see if it comes back down onto our line, we can just square it out. So we will wait for the other day, and we can square it at any day we want right now. We can even wait till the expiry date. The reason being, it has gone far higher. Now I would suggest you to trade 1 week or 2 week expiry contract to make quick buck and get out. Another option is to trade far higher, that is 40 days, and then square your trade on the weekly trades. That is, you have initiated a trade 40 days from now, and you see that the price has, let's say, coming back to your line. So you can initiate trades on this weekend and square them out. Or you can square the future trades today, because in options contract you can call them up at any time you want. It can be squared at any time you want. So if you are trading 40 days out, you can square them today as well, and that will help you book profits. See, it goes straight. Now the thing to remember is, now we are considering short iron condor. So we are looking at the top Bollinger Band. You can see it's 1819, 1818, 1819, 1874. One more day, it's 1816. So right here we can initiate our trades. Right here we would initiate our trade at somewhere, wait a minute please, somewhere in between this red line and our open, and it's 1746, so we can trade 17. Let's trade it at 1750, and 18 is our top and 17 is our bottom. Now if the trade trades in between these lines, we make money. 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day, 9 day, we are in profit. So we can right here square it out. Otherwise we can wait and see how it goes. Now as it contracted, it told us that there is a chance of it moving on any direction. So I would suggest you to square it at any day you want and book your profits. But let's see what happens next. It goes lower, comes back up, and then goes lower. See? So therefore you should always be booking your profit. We traded the trade right here. Okay, let's put in the icon. Right here we traded the trade. So it's 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 15 days means it's approximately 23 days. So it's if you are trading a 40-day options contract, then it is a half options time. And with time spread, you would have made half the money. To get the money in within a short period of time. Right here you could have squared it up. Reason why I am saying square it up, because we get to make the most profit on this red line if it is a short iron condor trade, and we are trading short iron condor trade from here. And as I was suggesting you earlier to trade within a week or 2 weeks, so it would have helped us to book profits if you would have squared it right on this line. Reason why? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You could have squared it here on the 11th day, or before that, right here on 9th or 8th day. Now why I am saying to square it right here? Because this D represents again the result season. Now after the result season, usually it tries to pick a direction. So why wait till the end? If our price told us right here, we would have gone there and squared it before the result season, right here. Even if the result would have come up right here on this day, we would have squared it right here. Because if you are trading on the result season, then the day of the result is the end day of your trade. Because you don't want the result season to change direction. Because if you are trading a short iron fly trade, then you don't want the result season to change the direction. Because in short iron fly, you are considering it to be directionless. Now before the result, it was directionless. But after the result, it won't be directionless. The same way, if you are trading a long iron fly trade, then before the result, it would have been rising. But after the result, it can change the direction. So why take the risk? Why not go smooth and get out fast? Why sit through it? Therefore, this is my game plan. Number 1, you see the Bollinger Band upper band. If it is contracting, you go for short iron fly trade and go for a short term trade, because in iron butterfly you make the full profit on the middle trades with the same strike prices. So get out after 10-15 days. Even if you have traded a 40 days expiry date options trade, then even get out within 10 days, because with time spread you will be having a good enough profit to book it. First thing. Second, if you are going for a long iron fly trade, then once the price rises beyond the Bollinger Band, it is good enough trade and the price will go up. But again, if you have traded an expiry date of 40 days, get out within a week or 2 weeks. Don't push your luck. Reason why I am saying don't push your luck, because basically these trades are designed for monthly income. So within 15 days, you get a monthly income. You lock in your profit and get out. And then you look for some other trade. As simple as that. Why go out and play risky? That after 40 days, if it did this, then I make this. If it did not, then I make this. Why not book profits? Because profits acts as a monthly income, but losses don't act as a monthly income. So book it. Book within 15 days, within 10 days. So that you know in your kitty, in your bank account, you have money, which will be good enough money to have a monthly income. Isn't it? Thank you.